Welcome to Signal to Alpha, your essential morning market briefing. I'm Lady Muriel, cutting through the noise to deliver what moves markets today. Let's get you your alpha before the opening bell. Here's your executive summary. Trump faces a critical economic test this Thanksgiving as consumer confidence deteriorates sharply despite improving inflation data. 76% of voters now rate the economy negatively, up 9 points since July. Political battles are escalating across multiple fronts, from military tensions to state regulatory fights, creating potential market volatility. And we're watching developments in healthcare price transparency that could reshape a massive sector. Let's break down what matters for your portfolio. The headline story moving markets today is consumer sentiment, and the numbers are brutal. Despite inflation cooling, American voters are increasingly pessimistic about the economy. 76% rate conditions negatively compared to 67% just 4 months ago. More importantly for markets, voters blame Trump roughly twice as much as Biden for current conditions. Here's why this matters. University of Michigan economist Joanne Su notes consumers view this as an unfavorable time for major purchases due to high prices and elevated borrowing costs. They may spend on smaller items if value is found, but big-ticket spending remains cautious. This Thanksgiving becomes Trump's real economic test, not through official data releases, but through dinner table conversations and holiday spending patterns. The disconnect is clear. Trump campaigned on lowering inflation and prices while implementing tariff policies economists say will increase costs. Trade analyst Scott Lincecum calls this a strategic blunder that damages credibility with voters already skeptical about affordability relief. Democrats successfully capitalized on these concerns in recent state and local elections, particularly in high cost of living areas like Virginia, New York, and New Jersey. For investors, watch holiday retail spending data closely. Consumer discretionary stocks could face pressure if sentiment translates to reduced spending. On the regulatory front, healthcare price transparency is heating up. Patient advocacy groups are urging enhanced transparency requirements and support for bipartisan legislation that would require hospitals to display actual prices for approximately 300 services and provide detailed itemized bills. A September poll showed nearly 90% of voters support enforcing regulations requiring hospitals and insurers to provide exact prices upfront. If implemented, this could significantly disrupt healthcare sector margins. Hospital stocks and insurance companies could face pressure as pricing power erodes. Meanwhile, political tensions are escalating. Senator Mark Kelly faces a formal military review over a viral video encouraging troops to refuse illegal orders. Secretary of Defense Pete Hegseth requested a briefing by December 10th on the investigation. Representative Eric Swalwell sued the Federal Housing Finance Agency over alleged privacy violations and mortgage fraud allegations. And Representative Marjorie Taylor Greene's surprise resignation creates an extremely tight Republican House majority, raising questions about legislative stability. These political battles create uncertainty that markets hate. Watch for potential gridlock on key legislation, including healthcare subsidies expiring at year-end. The bottom line? Consumer sentiment is diverging from economic data, and that matters more for near-term market performance. Holiday spending will be the real test of economic health. Healthcare transparency initiatives could reshape sector dynamics, and political instability is rising across multiple fronts. That's your signal to alpha for today. Subscribe for tomorrow's essential market briefing. Trade smart, stay informed. See you at the opening bell.